Be Wealthy and Smart, episode 1071.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about that rip-roaring bull market because the NASDAQ is taking off and it's looking very strong, just like we've been talking about. The cause of that today was the good news that we got from the ISM Non-Manufacturing Purchasing Managers Index, which showed a surprise rebound in July. The reading came in at 56.7, above 55.3 in June. And economists that were surveyed by Dow Jones were expecting only 54, so it was 2.7 points above expectations. And we also had June factory orders come in better than expected, rising 2%. So economists were expecting a gain of 1.2%, and it rose 2%, 0.8% better than expected. So all of this is basically saying recession. What recession? The numbers are looking better than people thought, and the possibility of a recession is getting a little bit more remote. The technicals of the stock market are also pointing to the chances of the June low being the start of a new bull market. According to Ned Davis Research, who is highly respected in the financial industry, they said that several breadth indicators show that the market's performance since hitting an intraday low on June 17th is more indicative of a new bull market starting rather than another bear market rally. And the S&P 500 is up more than 12% in that time frame. At the June low, the S&P was down more than 23% from its record high, putting it firmly in bear market territory. But now the index is down about 13.4% from its high. And today, NASDAQ is rallying 2.6%. And tech stocks were exactly where I said I thought the strength of the rally would come from. So NASDAQ is leading the way, very sharply higher since those June lows. We also have a plethora of data coming out from companies reporting their earnings, and Apple reported quarterly results last week that beat expectations on profit and revenue. So basically, with stocks rallying today, we're seeing economic data that slowed down the idea that a recession is inevitable. And that surprise rebound in July Services Purchasing Manager Index shook off worries that the U.S. has already fallen into recession, which meant investors went back to investing in tech stocks where earnings are good and growth is high. And the index released Wednesday ended 3 months of declines. And the data on durable goods orders and manufacturing in June were also better than expected. So a lot of data coming in that's looking really positive. We also had comments from St. Louis Federal Reserve President James Bullard, who also boosted sentiment. He told CNBC today that he doesn't think the U.S. is currently in a recession. He also said with all of the job growth in the first half of the year, it's hard to say that there was a recession. So we are seeing a lot of improvement, a lot of good news. All of this data that's coming in helped the Dow rally more than 400 points as investors are cheering the strong U.S. economic data and earnings. These are hard numbers that are telling us about the time period that we just finished. So it is rearview mirror looking. But when we look at forward-looking indicators such as interest rates, they're also telling us a story of softening and easing. Something that is telling us we're not going to have all of the interest rate hikes that were originally projected. This is going to help the housing market because since interest rates are trending a little bit lower, that's going to help people lock in lower interest rate mortgages. It's going to help sales. All those people that went to the sidelines and didn't buy homes for a period of time are going to be out there shopping. There is more inventory. So housing is going to get better than it has been the last few months as well. And this was the dip in interest rates that I said could come during summer. Well, the Fed doesn't meet in August, and that time allows for interest rates to come down a little bit. This is very good news for the economy. The markets are going to reflect it. I believe that June low is going to hold, and the rip-roaring bull market that I've been talking about is here. It's underway, and we are going to see a lot of those negative returns that we had year to date be made up. So there are going to be people out there with fear, uncertainty, and doubt trying to plant ideas into your head that this is just a bear market rally, but I'm not having any of that. I believe this is a major bull market. Ned Davis research supports that. My research supports that, and I am bullish, even though we're still going to have some down days, of course, but I think we are going to have a very strong recovery. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And all of my podcasts are available at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.